This is the Resilient Advisor Show with Jay Coulter.
On this episode of the Resilient Advisor, I'm going to share 3 short stories from recent editions of my Saturday Note. First, we'll share a story about how you should look at service as your best sales engine and my recent interaction with Y-charts. Then we'll take a look at some potential risks inside of money market funds, something advisors haven't even been considering. And finally, a personal story about how failing my son made me a better father and business partner. I hope you enjoyed these short stories. In a panic, I woke up at 4 a.m. The night before, I was putting the finishing touches on a big proposal that I had coming up the next afternoon. I had just hit a major wall. A crucial function inside of Y-charts, one that I had used countless times before, wasn't working. Under their standard processes, I reached out to my representative at Y-charts and scheduled a meeting. The problem, and the reason I was up at 4 a.m., is this meeting was not set until after my big presentation. In desperation that morning, and with a little bit of panic, I reached out to my representative, James, asking for guidance. My phone rang 10 minutes later. It was 7:15 in the morning. Within 2 minutes, we were on a Zoom. The problem was solved, and it turned out it was user error on my part. Service is sales. I've recommended Y-charts to my advisor clients since 2019. They don't compensate me for referrals, but I'm happy to support them because it's a great product for advisors. I offer my OCIO services and my model delivery business through Y-charts. Their experts have been on my podcast and financial advisor television many times over the years. Someday, a better product may come along. In fact, it probably will. Do you think I would switch service providers after experiencing that level of service? Not a chance. Not only did I get a reply, but it was also from a person who was genuinely eager to help. This wasn't just customer service. It was personal. It was swift. And most importantly, it was empathetic. James could tell the situation I was in. As we worked through the issue, I couldn't help but feel a strong sense of relief and gratitude. It was clear that James, and by extension Y-charts, I wasn't just another service ticket for them. I was a professional that had a problem, and that problem mattered. In a world where products and features can become quickly duplicated, it's the personal touch, the willingness to go above and beyond that truly sets a company apart. Y-charts didn't just help me with a service issue. They showed me that at the heart of every successful business is not just what you sell, it's also how you support it. As we sit today looking at the market sitting at all-time highs, it's easy to get complacent. Don't do it. Be like Y-charts. And in my book, that's the best salesperson you could ever have at your company. How long has it been since you've worried about the risks in your money market funds? For me, it goes all the way back to 2008. I've recently had some conversations, though, with people who are much smarter than I am, and they're concerned about the potential risks in particular, prime money market funds. It's not inappropriate to say that most advisors and investors consider their money market funds to be safer than risk assets. But are they? Let's start with what is a prime money market fund. According to the Charles Schwab website, prime money market funds primarily invest in taxable short-term obligations issued by corporations and banks, as well as repurchase agreements and asset-backed commercial paper. Note, the SEC has changed the rules governing money market funds 3 times since 2008, in 2010, 2014, and last year in 2023. In an informative article from the law firm Rogers & Gray, I learned about 2 terms from the most recent release last year that really require more research. These terms are liquidity fees and reverse distribution mechanisms. Those are not the terms an investor wants to read about when it comes to their safe money. It's fair to say that liquidity fees and reverse distribution mechanisms would not be used unless the markets were under extreme duress, which is exactly when you have the highest likelihood of needing those funds. So, are Treasury money market funds the solution? As the name suggests, These funds will invest in the U.S. Treasury market. Generally, you get the same liquidity as the prime money market funds while giving up a little bit of yield. In a Treasury money market prospectus I read recently, it says, quote, "The full faith and credit backing is the strongest backing offered by the U.S. government and traditionally is considered by investors to be the highest degree of safety as far as payment of principal and interest." Sounds great, right? Well, in that very same prospectus, in the next paragraph, it says, quote, "Based on the fund manager's view of market conditions, the fund may invest up to 20% of its assets in obligations that are not guaranteed by the U.S. Treasury, including Fannie, Freddie Mac, and Federal Home Loan Banks." Remember 2008? Is it worth that risk for your safe money? Probably, but is probably good enough? I personally prefer Treasury ladders today. Here's the takeaway for advisors. Research any prime money market fund that you're using and document your assessment of those risks in your investment committee meeting. Put it on the record. Determine if a different money market fund would be a better solution, but be sure to read the prospectus. And then call your clients and prospects who have money held away from you and just offer to read the prospectus for them. You know they're not reading it, and it could open up some conversations. And for investors, as always, whenever you're going to invest, know what you're investing in, read the prospectus, even on your money market funds. The name of the fund might not be telling you the whole story. Please reach out if you have any questions. It was a scorching hot July afternoon in Panama City, Florida, with the kind of heat and humidity that left you soaked the minute you stepped outside. It was day 5 of my son's big week-long travel baseball tournament, and I was the coach of the team. Everyone at this point was exhausted. The coaches, the parents, and definitely the players. One of my steadfast rules as a coach was very well known. If you cry, you leave the dugout. No exceptions. At this point in the tournament, my son had only had 1 hit. I had to move him to the bottom of the lineup. It was an unfortunate situation and an unfortunate time for him to fall into a slump. I watched in agony as my son took a called strike 3 for yet another strikeout. Then he started to cry. He had never done that before. Disgusted, I threw him out of the dugout, sternly telling him that he was embarrassing himself. He came back 2 minutes later, still upset, and I threw him out again. He was only 10 years old. Baseball is more than just a game. It's a rich source of life lessons that extend so far beyond the diamond. From the strategy employed by the teams to the resilience shown by the players, baseball mirrors many aspects of life. This year's Super Bowl was the most watched game in history. The 2 starting quarterbacks had something in common. They both played competitive baseball. There was a great article in the Wall Street Journal talking about how baseball helped shape their careers and life. Regardless of the level of baseball someone plays, there's some attributes that are learned that translate into life lessons. This includes dealing with failure, teamwork, collaborations, patience, discipline, adapting to change, and respect for rules and fair play. Baseball is so much more than a game. It's a microcosm of life. The lessons it teaches are invaluable. I failed my son on that hot July afternoon. I knew it minutes after it happened. I felt immense shame and guilt for my overreaction. There's a picture of that team hanging in our basement. I am sure every time my son sees it, he has fond memories of a full week of playing baseball at the beach with his friends. When I see it, I'm reminded of the guilt that I still feel today for how I treated a 10-year-old boy. But baseball is about dealing with failure and adapting. It's been 7 years since that hot summer, and I've never spoken to him like that again. Everything I do is based on positive reinforcement with my son. He's about to enter his junior year playing baseball, and I couldn't be more proud. But here's how I've used this lesson in business. I never raise my voice or show frustration towards an employee or business partner. I take care to be overly calm when mistakes are made. And if something upsets me, I sit on it for at least 24 hours. This was not how I approached business or life before that hot July baseball game. Today, it fundamentally shapes the way I interact with people. I hope you enjoyed this note.